Ladies and gentlemen, apes and apettes, welcome back to the channel. We had a phenomenal day for AMC stock today, up 15.28% at the close of the day, surpassing my estimate, my price target by the end of this week in between $16.50 and $17.50. We blew that out of the park, and we are now sitting at almost $19 per share. So congratulations to people that took the opportunity to average down on their positions at that $15 support range. Here in this video though, I do want to go over the 90% option flow from institutional investors today that is bullish. You have to go back to November, if not December at the very earliest, to see a 90% bullish order flow single day. So we're going to talk about that. We're going to go over all of the information you need to know, talk about why the share utilization is now at 100%, and we are also going to talk about what Gary Gensler said today. So if you guys find value out of this video or simply entertainment, hit that like button for me, subscribe to the channel, let me know in the comment section, are you guys excited to see what is to come? We have CPI data coming out tomorrow, and that is going to throw a wrench in a lot of what we are saying here in this video, but we're going to go over the two scenarios. So let's dive into it. Like I said, AMC closed at almost $19 per share. I know a lot of people in the trading community, link down below, did buy AMC options and made 500% gains on those options. So also congratulations to you guys if you did make money on those. I personally did not make a trade on that just because AMC is so volatile. I like to buy the shares, but nonetheless, we had a lot of winning trades today and over the past couple of weeks. So if you guys want to be part of that, linked down below in the pinned comment. So that is looking good right there. We're sitting at about this resistance level, a little bit over this at 1850. This is a line that I have had drawn for a long time now, and you can see just what kind of resistance we faced at this level. It's pretty obvious. Right here was resistance today, right here, right here, and right here, and right here. So we had 4 tests of this 1850 mark until we finally did break out above this, came down, tested that as support, and then we continue to rally from that. So that is a huge thing in my personal opinion. And if you're looking at the daily candlestick chart, it looks like we are heading for a technical breakout. The Bollinger Bands, the 20-day simple moving average, is sitting at $17.21 per share. We blew past that. We have not been above that in this big of a meaningful way since November 23rd to be more exact. So if CPI numbers are good, just get ready for tomorrow. Your portfolios are going to be exceptionally green and you're going to be one happy camper. If the markets are bad and CPI is coming in at, let's say, 7.5%, 8%, you're going to see a wildly bloody day in the marketplace. The trading algorithms are going to flush the market with sell orders, and that is the estimate: 7.3% month or year over year inflation and 0.5% month over month. So if those numbers come in at expectations, I would expect a very volatile day, but not a huge down day because it's expectations. If they come in at say 6.5%, people are going to really, really love that. So keep that in mind. I am hoping for the best, expecting the worst, and I think that's also what people should do. Now, on that note, if that does happen, we could drop back down to $15 per share. I don't want to fool with you guys, but more than likely we would come back and retest this 20-day simple moving average at $17.21 per share, and that's quite substantial drawdown from where we currently sit at $18.88 per share. So that would be over $1 move to the downside, about $1.50 move to the downside. It would be a big move. So that's really what I would expect, as low as 15 if the markets have, say, a 5% down day or something crazy along those lines. So very exciting overall. Whichever way it plays out, we are ready. We are fully hedged out for the downside or the upside, going to take advantage of the volatility nonetheless. Now, as far as the information that you guys need to know and the option flows from institutional investors, take a look at this. 23 orders from institutions. These are not 1 or 2 contracts. These are $30,000 plus orders. Some of these orders are over $1 million. You're seeing a 90% positive order value on $11.64 million. Take a look at these stupid bearish numbers. Yesterday, 14% positive order value. That's ridiculous. Over the last week, 38% positive order value. That's off the charts. Now to see 90%, you're seeing institutions flipping and they're starting to go long via options in AMC, and it's starting to squeeze out some of that artificial shorting power from the puts that institutions have been buying, like you see over the past week, that caused that artificial shorting. So I think it's a lot of hedge funds versus hedge funds at the current moment, and that's ultimately what we want as we just sit there and wait for the tendies to come. So that's looking really good. Want to make it a point of putting that in these videos because I think it is very important. As far as the short interest, you're looking at 21.18% short interest of free float, 108.72 million shares that are sold short, cost to borrow max of 1.81%, and the share utilization is 100%. Now, exactly why this is actually happening. One, AMC did get good news today that they are hiring the former Frito-Lay executive to new role of VP growth strategy, starting with popcorn. And Adam Aron did say Copen will head implementation of growth ideas to broaden and transform AMC. So the reason why the share utilization is going up to 100% so fast is because institutions, one, are starting to flip and go long on the stock. So nobody wants to give out their shares and not be able to buy and sell their shares. Nobody wants to lend them out for 2%, 3-4% interest if AMC is moving 15% in a single day. When you do see the share price get very volatile and start moving up, that's when you tend to see the utilization move to the upside. And that's a very notable trend. It always works like that. So that is what is going on, and that's also important to know. Days to cover, 2.51 days to cover. I don't think this is a lot of shorts covering because I think shorts are in the camp of, they know stocks go up and they come back down. So if they can just hold on while the stock goes up and they lose money, they can cover when the stock goes down so they don't lock in a loss. But ultimately, it's going to happen. They're just kicking the can down the road and delaying the inevitable. As far as the Stocko tracker data, sorry, we got to get through this fast because there's a lot of data here. You do see for this Friday, 46,000 calls that are in the money, 90,000 calls that are out of the money, 22,000 puts that are in the money, as well as 69,000 puts that are out of the money. So if we do continue to see that move to the upside, if CPI is good, there's definitely a lot of fuel on the fire as far as the option chain is concerned. And the max pain is sitting at $17 per share by the end of this week. As far as the CPI, I want to put this in here real quick. The CPI comes out at 8:30 in the morning. That's why you've seen a lot of very volatile moves in the S&P 500 towards the end of the day, just whipsawing huge candles to the upside, to the downside, just a lot of volatility because people are finalizing those trades. And by the time you wake up in the morning, you're going to see, hey, did markets take this bullish? Did they take this bearish? And you're just going to have to hold on for the ride at that point. As far as what Gary Gensler said today, basically the same things that we have been hearing about, that we've been talking about. There's 50 proposed rules that Gensler is considering this spring, one of the largest regulatory pushes by the SEC in decades. He again reiterated the fact that they want to go from T+2 sediment to T+1, or even in the same business day. There was also some talk about payment for order flow, but nothing definitive as of right now. So you guys already know a lot of the situation. I'm not going to read this whole article. If you guys want this article read to you and want to talk about this a little bit more in depth, the last video I did put out went over this whole article as well as some other things. So that's basically all from that. As far as the 13F filings, let's go ahead and refresh this good old page. And we could see that it's pretty muted, but you are seeing a lot of brand new positions, as you can see from all of this green today, and some adding to positions as well, but it's still fairly neutral at the current moment. So keep in mind everything that I said. If I went too fast for you, if you missed something, make sure to go back and rewind, because all of this is very important heading into tomorrow. Another positive note though, from the earnings that we are getting from Disney, up 8% in after hours, Twilio up 18% in after hours, Uber up 6% in after hours, MGM up 1.53% in after hours. You get the idea. Earnings are really good, so that is going to catapult a positive reaction or potentially a negative reaction coming tomorrow off of CPI. So that is going to be all for this video. If you guys found education, if not simply entertainment out of this video, hit that like button for me, subscribe to the channel, and comment down below. If you guys want access to all of my trades as well as join a great trading community, check that link out in the pinned comment. Want to get yourself some free stocks? By all means, Moomoo, Webull, and Public are at your disposal in the description of this video. Thank you guys for watching. I will see you later on the live stream, but until then, you guys take care.